All right, we're going to be talking about the trucking industry and the microeconomics of that and COVID's impact on the industry. So we'll be looking at both the short and long-term effects on the trucking industry as a whole. The trucking industry, as you know, is the industry that really transports a lot of the freight in the United States. About 71% of the freight is moved by trucks. And so that comes out to be about almost $800 billion in gross revenue. That was in 2019. So it's a very large industry. In terms of who owns the freight, there's a pretty clear division in the industry. So about half, a little over half, of almost 900,000 carriers were for-hire carriers. These are carriers whose whole business is the trucking. So other companies hired them to carry the freight. On the other hand, you have private carriers. So think your Amazon or Harris Teeter, that sort of thing, where companies have in-house transportation. And so that's for the purpose of supply chain and distribution. And so this was about 770,000 carriers in 2019. So slightly less, but roughly half of the market. So actually there was a shortage in the labor market. So there were about 60,000 fewer truck drivers. This was before the pandemic than were demanded. And so obviously this surplus kind of evaporated as demand fell pretty quickly during COVID, so that there's no longer a shortage. That's supposed to be shortage. But anyway, about 20 to 30% of trucking fleets actually had a plan in place. So very few of the companies were actually prepared for this sort of disaster. And so the economic effect was pretty strong right off the bat. So we'll look at the price and quantity. We focused on three things that will impact the price and quantity. So the price elasticity of supply and demand is one. Then we'll look at the type of goods that trucking is. So, and then we'll also look at the cost of productions. So first of all, the price elasticity of demand and supply. So as demand decreased when the companies shut down, the price of trucking also decreased. But it's important to know that because trucking is essential for these businesses' supply chain and their distribution, the price elasticity of demand is pretty low. So this means that when the demand for trucking, or when the price of trucking decreased, the demand for trucking did not increase very much. So that's just a kind of reaction in the trucking industry. This also means that the supply of trucking didn't decrease very much since, quitting the trucking industry is at a high cost for these companies. And so this means that the demand and supply price elasticity is between 0 and 1. So this means that when there's a change in the quantity supplied, the percentage and the change in price is higher. So I think that Denzel will explain kind of the market graph here.
Sure. As we explained previously, the trucking industry was a perfect competitive market with both elasticity of supply and elasticity of demand very low, between 0 and 1. That's why we present the demand and supply line pretty vertical. You can see they are really close to vertical, which means even though the price might change very much, the quantity demand and quantity supply will not change very much. As the pandemic hits the trucking industry, the supply and the demand both decrease, causing both curves to shift to the left and reaching a new equilibrium, which have a lower price and lower quantity in the trucking industry.
So in terms of the price of goods, we're really not talking about what goods the trucks are shipping. We're more talking about thinking of trucking as a good. So trucking is an essential good for these businesses. So if the businesses are producing, then the price and quantity are going to be high. So The main outcome of this is that when everything returns to normal and when these companies start producing, the trucking industry will rebound because this is an essential good for these industries. So it's really based on how much production there is. And so obviously demand for trucking is going to be low and there's little production, but when production increases again and the market's open, trucking is necessary. So it'll return pretty quickly to normal levels. The FTR Transportation Intelligence, one of our sources, predicts that the trucking freight market will recover by the end of this year. And so this is a positive outlook and it's a good sign for these for the trucking industry.
So this diagram was based on the previous one, and as we mentioned, the trucking industry was considered as essential goods. So it's gonna be shifting back after the pandemic, as FTR predicted. There's gonna be a quick rebound at late 2021, and they optimistically believe that the trucking load will increase by 5% in 2022. So in this graph, the both demand and supply will shift to the right, even exceed the equilibrium before the pandemic, reaching a new equilibrium which have higher price and higher quantity because both supply and demand are expected to shift rightward after the pandemic.
So when we're looking at our third concept, which is cost of production, we see conflicting movement in the different variables, but the overall cost of production for the trucking industry has risen during the pandemic. And the two main variable costs that we looked at were fuel prices and the cost of labor. So oil prices have been in decline over the past year and recently hit an all-time low due to the pandemic. However, Ibis World notes that the world price of crude oil, which determines diesel prices, is expected to rebound in 2021, having plummeted in 2020 as a result of the pandemic. And so while we have seen some of this rebound in recent weeks, as we've seen a rise in gas prices, fuel prices will most likely remain volatile in the coming years. And luckily, the declines in oil prices have been large enough to offset growing demand for the industry services. And then cost of labor has also increased as the risk of the job has increased due to safety measures in COVID. It's easier if a person is out and driving about, then it might be easier for them to contract COVID. They're more susceptible, so that would increase the risk and thus increase the cost of labor. So on our next graph, or on our next slide, here you can see the graphs of both the gas purchases and the wages as the percentage of revenue of the trucking industry over the past 5 years. And when you're looking at once 2020 hits, right when COVID hit, you can see a clear downturn in both of them from 2020 to 2021. And then Denzel will explain the market diagram for the cost of production on the next slide.
So we make a market diagram for one firm of the cost of production. As Grace stated, the cost of oil and cost of labor will both increase, which means both the fixed cost and the variable cost will increase in this situation. So in the graph, both the marginal cost and the average cost curve will shift upward, creating a new equilibrium which have a higher price, indicating a higher cost of production in this case and less quantity.
So after looking at these factors and concepts, we then wanted to look at how this would impact the economy in both the short term and the long term. So in the short term, we can expect to see lower fuel prices, as mentioned, and the cost of production. And this is considered a short-term effect because fuel prices are expected to be volatile in the long term. And we can also expect a decreased demand in services will be short-term, as many businesses will reopen after the pandemic is over and demand will adjust. And then labor shortages should also be short-term effects, as more people will want to return to work once it's safer post-pandemic. And we've already been working towards that with our vaccine campaign. And in terms of long-term effects, we can expect to see increases in consumer spending, which are expected to continue in the coming years, and thus leads to an increase in shipping services needed. And going along with this, revenue and profit growth are expected the industry in the long term, with a 2.7% revenue growth rate predicted for the next 5 years. And wages are also to remain high. As IBIS World reports, wages paid will likely continue to grow as demand for truckers increases and the aging workforce continue to retire. And the current shortage of drivers has placed some strain on operators, which has resulted in increased wage costs as a portion of revenue. And wage costs will likely continue to increase as operators attempt to attract new workers in the industry. So that's why we can see this as a long-term economic effect. And then on the next slide, where we can take a look at the short-term and long-term kind of industry effects in general. So in terms of industry impacts, we can see some more minor effects in the short term, whereas in the long term, we're focusing a lot on how we can fix kind of these short-term issues and the issues in the industry that COVID has highlighted really. And this means that while supply chain distributions, emergency deliveries, driver travel inconveniences, and essential goods status are all short-term effects and will probably be temporary, we can expect to see a lot of innovation long term. And the supply chain distributions will be, people will learn from the mistakes that they've noticed, and we may see a shift from face-to-face to more technological advances such as touchpads, iPads. We're already seeing a lot of that, and more just computer interaction rather than face-to-face. And this also this comes from an impact of social distancing as well. And so we may also see we may also see a labor shift when we take into account the rising wages. And not only that, but when we're looking at innovation in terms of autonomous trucks and the various methods such as platooning, which is where one driver will basically lead a fleet of like autonomous vehicles behind them. And this could greatly reduce the amount of jobs in the industry looking forward if they only need one truck driver for about 5 trucks, if they are able to move forward with this autonomous truck innovation. So, and then with fuel prices being volatile, like we've discussed, many companies are also looking into alternative hybrid electric vehicles to help with costs and the environment overall. So overall, while the trucking industry has seen some short-term effects from COVID-19, they're one of the more stable industries right now, and they're expected to grow in the next 5 years. And we can predict significant technological innovation to combat some of those short-term effects like I was just talking about, but the industry overall is relatively strong and growing. Thank you so much for watching our presentation. We look forward to hearing your comments and questions. And here are our references that we used.